Alright, so today we're going to look at using a trade sheet or a trade log to better help us in our trading. This is something I've been doing for a while now that has really helped me figure out what works, what I'm doing right, what I'm doing wrong, maybe what type of trading style works best for my lifestyle. This is something, this detailed record keeping maybe isn't something that fundamental long-term traders do or need to do, but if you're a shorter term trader, a technical trader, especially if you rely on trading for part or all of your income, this is definitely something you need to do. And there are better ways, of course, out there to account for all this detailed information, but I just wanted to show you an easy way using Excel or numbers, which I actually use. So I just use Excel. I don't need anything fancy. So anyway, I'm just going to go through this really quick. We have the entry date column here, the day that we entered the stock, the symbol of the stock, the number of shares, the entry price, the total amount with commission. So don't forget to account for commission here. Initial stop. I know a lot of people like to use an actual stop loss order. So, for example, on this one, you might have used a stop loss at 360. I like to use either uptrending support, that's what that US stands for, or a trailing stop order. That does require, well, with the uptrending support, it does require monitoring the position a little more closely. So, some people may not be able to do that. But anyway, just so you know, that's what that means. Also, again, a trailing stop is a great way to protect from losses as well. This we have our profit target. Again, I'll mention real quick, I'll go into this in detail in a later video, but what I like to do is actually set a trigger at my profit target, and then that trigger then activates a trailing stop loss order. That really is a technique that has helped me tremendously. So then these three columns I actually don't use generally, but I just put them up here for those who might use them. Risk reward, I don't figure that out. I don't calculate that because I can kind of assume it in my head, but this might be 3 to 1, 4 to 1, 5 to 1, whatever, depending on your profit target and your stop loss. Adjusted stop and adjusted profit target. I know some traders like to exit, let's say, half their position at their initial profit target, but then they like to hang on to that other half of their position and shoot for a higher profit target. So if you do, these columns are for you. So what else? We have exit date here, number of days held, which is of course our exit date minus our entry date, excluding weekends and holidays. Exit price of the stock, total amount with commission that we got paid for when we sold the entire position. Again, don't forget commission there. And then we have profit and loss in dollars and profit loss percentage. Here I have, in these cells, I have used conditional formatting, which is right here. This really helps me, especially when the trade sheet gets more populated. This helps me to just quickly look at maybe the best performers and the worst performers. Of course, the best being the green, worst being in the red. And with that said, this here, that red doesn't mean negative as we're used to seeing. That just means that's the worst performer. Of course, as this gets filled out, I'm going to have some that are negative, which will then show up in red. But I really recommend using that conditional formatting to help you just quickly see what you're doing right, what you're doing wrong. For example, here, we may see that it's a small sample size, so take this with a grain of salt. But we may see here that, okay, this trade was our worst performer, and what are the differences here? What did we do wrong? Did we have a different stop loss? Did we get stopped out as we exited at 708 as opposed to hitting our target? Maybe we had a trailing stop there, or maybe since we held this position for 10 days as opposed to these that we held for a month or a month and a half, maybe we're better at longer term trades, or mid-term trades I should say, holding for a month or more or something like that. So these are things that you'll have to figure out kind of on your own. But again, that's the point of this trade sheet, is to see those things, see what you're doing right, what you're doing wrong, where you can improve. Also down here, I'm just going to show these are things that if you're treating your trading as a business, which you really should be doing if you're relying on trading for for some of your income, or I think you should be doing regardless, but you should definitely have this information down here. So we've got average capital per trade, so how much we're putting up on average per trade, average days held, average profit and loss per trade, average profit and loss percentage per trade. So this really helps us, as with any business, you can look here and say, okay, well, we're making $202 every 21.6 days on each trade, meaning that I guess another way maybe to say that would be that for every $2,700 that we put up in 21 days, we're going to make $202. Again, on average, we're not going to ever assume that we're going to make that, but that's how we're performing. So yeah, so that information is definitely essential and should always be looked at. Then I'm going to show you real quick. I'm not going to go into too much detail on this next tab here, but this is our monthly and quarterly profit and loss. I just filled this in real quick with some random numbers. So we've got here what I do is, or I'm sorry, this is let's just look here at January, maybe just the first quarter, since this is heavily populated, kind of intimidating looking at first glance. So anyway, so what we're going to have here is just the open of January, what we started on January 1st, how much money was in our account, and then what we closed with last day in January, minus any cash deposits. So when you're doing, I'm not going to go into detail, but when you're doing your calculations here, don't forget your cash deposits. And those calculations, I'm not going to go into detail, but if you have any questions, just email me or contact me at epsilonfinancial.com. So again, open, close, this is going to show our monthly profit and loss, and then also in percentage. As I filled out the rest here, this will also show us our quarter profit and loss here. So this is really, really good to see that maybe, the first few months, as they generally are, the first 4, 5, 6 months of the year are generally going to maybe perform better than summer, let's say, or whatever it may be. So, oops, I screwed that one up. So that is something that you'll want to, or that you'll, again, with using that business mindset, you'll want to look at this information and really dive in and see throughout the year where you're doing best and where you're doing worst, exactly how you would here, how you're looking at each trade and seeing what's going right, what's going wrong. You'll want to do here. Maybe after a few years you're going to see that certain months you're just not really good, so maybe those months protect from loss a little better, or so on and so forth, whatever. You can figure that out on your own. So that is pretty much it. So if you have any questions on this, email me or contact me at epsilonfinancial.com. Just go to the contact page. And thank you for watching.